Hello! Today we're going to be discussing closing entries. Closing entries are journal entries performed at the end of a period that reset the balance of all temporary accounts. Now there are some accounts that are temporary, meaning they're only associated with a time period, such as a month or a year. And after that time period has passed, we need to reset the balance back to zero, and we call that the closing process. Now there are four types of accounts that need to be closed, and the acronym READ helps us to remember the four types of temporary accounts that will be closed. So READ right here, spelled R-E-I-D, is an acronym where each letter stands for a different type of account that will be closed. And the four types of accounts are R for revenues, E for expenses, I for income summary, which is a special account that's only used as part of the closing process, and D for dividends. So now I'll show you how we do the closing process with an actual problem here. So first we need to close the revenue accounts. That's step one. And we'll see we only have one revenue, and that's right here for consulting revenue. So that has a credit balance right now of $2,485. So in order to close that, to get it back to zero, we're going to have to apply a debit for $2,485. So that's what we'll do over here. We can debit the consulting revenue for $2,485, and the corresponding credit is going to be the income summary, also for the same amount. Next, we can close the expense accounts. That's step two. So you'll notice all the expense accounts are listed here at the bottom of the trial balance. And those all have debit balances. So in order to close those, we're going to have to credit each of the accounts. And we can actually do that in one journal entry. So I'm going to grab the titles of all the accounts, leave a space for the debit, and paste all of the credits. And then I can also grab the values here. And the debit, kind of similar to step one here, is also going to be income summary. And that's going to be for the total of all of the expenses. So you'll need to add all those up, and in this case we get $1,295. Now something to note about this income summary account is it's actually tracking our net income. If you'll remember, the way you find net income is you take the revenues and you subtract the expenses. And that's exactly what we're doing here. We're taking the total of the revenues, $2,485, and then we're subtracting the total of the expenses, $1,295. So the balance of the income summary is really going to be your net income. So the first two journal entries here are really the journal entries related to the income statement. And that's going to be important as we move to step three, which is to close the income summary account. Now you won't find the income summary account on the adjusted trial balance. You'll have to find the balance based on the first two journal entries that you've already performed. And we can do that using a T account. So we have a T account here made for income summary. So we can grab the credit of $2,485 and the debit of $1,295, and then calculate the balance by taking the larger number and subtracting the smaller number and writing the balance on the side of the larger number, which ends up being $1,190. Now there are two possible situations for the balance of income summary. If your revenues are larger than your expenses, you're going to have a credit balance for income summary, and that's the most common case, and that means you have positive net income. But if your debits are larger than your credits, then that means you're going to have a debit balance for income summary, which represents a net loss, and that's going to slightly change the journal entry. So here we can close our income summary. Since we have a credit balance of $1,190, we'll need to debit income summary for that amount. And the corresponding account that goes with that is the retained earnings. And if you were to have a debit balance for income summary, then you just have to switch this journal entry. So we'd have a debit to retained earnings and a credit to income summary to close out the debit balance. Alright, we are on to our last journal entry, which is to close the dividends account. And we see dividends right here, which has a $700 debit balance. So we can choose a new color. And so that means we're going to have to apply a credit to dividends to close it. So we're going to credit dividends here. And then the corresponding account that's going to go with that is again going to be the retained earnings account. also for $700. Now, something you might notice about the last two journal entries that we did is, well, we used retained earnings in both cases, kind of similar to how we used income summary in the first two journal entries here. And that's no coincidence. Remember that the income summary was tracking the balance of the net income, taking the revenues and subtracting the expenses. Well, here, if you remember the statement of retained earnings, it takes the beginning balance of retained earnings, it adds the net income, which is this step right here, and then we subtract the dividends, which is right here. So really the last two journal entries that we're doing here are the works of the statement of retained earnings. Alright, we are finished with the closing entries. So the good thing about closing entries is they're the same process every time. So as long as you remember read, you're going to be in good shape.